What's up everybody, Tom here with another video. In today's video, we're discussing everything to do with the stock markets right now and where they're going next. We see the QQQ here, the Nasdaq actually moving down along with S&P 500, and this is ahead of big news, the FOMC meeting and some other big things. Apple chip shortages, Tesla breaking out of resistance, we've got it and more in today's video. Stay tuned guys, it's going to be a good one. All right, everybody. Well, here we begin our market recap for the markets closed 12th of October, 2021. And straight away, we look at the heat map here of the S&P 500 and we notice some big concerns. Obviously, Fang stocks started shorting off and these particular stocks shorted further after the close. And that's why we're down here in the futures market. Tesla did quite well, 1.74%. We'll be talking about that more as it's a significant breakout. But let's now have a look at the indices and see what was happening. So as we mentioned, sell off into the close. The hour of power, the last hour of the trade day, that was led by Wall Street selling into the close. This is important because whatever Wall Street does, we should be paying attention to. The only notable thing was that IWM, the Russell 2000, the smaller cap companies, actually held a bullish day. Some of the hyper stocks doing all right out there. When we look at the sectors inside of all of this, it's really convoluted. Some were up like utilities and real estate and things like that. And some were down pretty hard, such as communications. There's nothing much to go with in terms of the actual sector discussion through that session. But let's get into our technical analysis and start looking at the options market to see if we can understand what Wall Street is trying to do over the next couple of sessions. And we mentioned it before, the FOMC meeting is going to be a big thing, the meeting minutes. Those particular bits of release dates, and we've also got other big news we'll talk about later coming out, will tend to flow through this market. But if you're looking at this market right now, such as this SPY chart, you'd be starting to think, well, this looks bearish, doesn't it? And we've been talking about the bearish action here since the 440 was reached. We moved back, we bounced, we created the 20 and the 50 moving average, we touched those levels, we instantly rejected them. Another bearish candle through the non-farm payrolls result. That's the jobs numbers out of the US. Another bearish candle yesterday. And it was pretty clear that today's candle was also going to be relatively bearish. So there's the movement down. And at this point, we start to expose that 430, 428 on the SPY. This level is going to be the level that I think a lot of people will be looking at for the market to move down to. And if it does close past here, well, we've discussed this several times already. Let's look at it on the SPX. If we close underneath 4,300, where's the next most logical zone for the market to go to? And it's going to be a very big one. It's going to be the weekly 50. The weekly 50 has not been touched ever since this pandemic crash turned into a monstrous bull market. Yet most good corrections do go down to these levels. So 20 is very standard, 20 weekly is very standard. We've already hit that. But remember, if we get underneath and we close a Friday underneath bullish wick, bullish wick, bullish wick on the weeklies, that is significant. And we know that Wall Street will then try to push it towards this level being a very important zone for the markets to bull up off. If they don't buy this level, well, we're in a bigger correction than even I thought. At this point, you'd be thinking, things don't look too good in the markets. But at this stage, yeah, we're still looking bearish on the smaller time frames. Bearish if we get underneath 4,300 in terms of the market. And the bulls really don't take control of the market here until they close it above these wicks over here. You close the market above 4,400, you closed above that 4,430, all the bears will be getting destroyed at that point, and this is where the bulls really take control of the market, push it back up to 4,490. We've got all the key levels showing here. So let's now understand the options market to see why this could be occurring or where the key zones are. And this is the data that's been picked off the last 24 hours of trade, and of course the last session open in terms of options. And we have this 405, 400 kind of strike put for this week, expiring 15th of October. And then we have the massive call wall that we've been discussing for some time, which has really made us realize that the market wasn't going to V-shape reversal. When we have so many 450 call SPY options open, it's very unlikely Wall Street wants to let the market through that zone. Another interesting thing that we saw during the session was actually the maximum pain level. So this is the level that if Wall Street was going to make the most amount of money from expiring almost every option worthless for the week ahead. What we see here, the 437 for the 13th was the level that would be maximum pain. But if we go over here to the 15th, let's take a quick look at that together and see where the maximum pain was. So in this case, it's 440. So actually some more bearish bets being placed through the last session. Remember, this was 438 off the other one. Don't always use this chart, guys, to predict where the market's going to close. What you prefer to do is use the larger option positions or the call wall and the put walls to find out what's best. And of course, you can get this information if you're interested by jumping over to fxevolution.com and then jumping into the 7-day free trial for our private community. You can grab all of that data and it's really good stuff. So if you want to give it a shot, why not jump over to fxevolution.com and check it out. So let's now take a look at Tesla. Let's have a look here at the breakout that's occurred and what's happened here. So the breakout has happened. It's gone above 800. And this is a super important zone. 800 we've talked about and speculated has been like really allowing the bears to try to control this market. And something very interesting happened over the last 24 hours of trade. And we'll take a look at that when we look at the options. But 800 plus cracked, very important. Next level becomes that 820. But we also get open now to the idea that the market can run towards that 880 high. And it looks inevitable that Tesla wants to go here now. This is bullish action. We've seen very strong buying now for weeks. We've been very bullish here on the channel from a technical standpoint on Tesla. And 800 is a bit of a celebration. So hopefully you guys are pretty excited about that. Let's see if we can get a bit of a bull out of the gates. And the only thing really stopping this right now, other than the potential worries about chip shortages, is really the rest of the market tanking. So whether we like to admit it or not, if the rest of the market does decline, let's say 1 to 2%, so that's the Nasdaq, if that market declines so much, then it will push down Tesla. It's inevitable. But overall, it has held amazingly well, and 800 plus is a great closure out. Let's now take a look at the options interest. And I don't know who's doing this, but look at this. A massive 760 put in here. Check that out. That is, or maybe it's a 750 put. This put here is massive. And they've just got it in for the 15th of October. So they've put this one in and it's a big put wall. We now have a great level of even further support higher up where we don't expect the market to be able to get underneath this zone by the end of the week. And what a big position. I wonder if that was the Burry himself. Look at that. Call still relatively small. If we do continue to see ramp, you expect these to go up quite heavily. And usually we'd expect chatter to increase as well around Tesla after such a big breakout close. So some great options there coming into the market. Let's now move over to Apple, discuss this one, because this is what we really need to look at right now. So here's the Apple chart. You'll notice it's gone underneath 142. Really big closure there into the close. And after markets, this is down a further 1.42%, sitting at 139.50. So even further down here for Apple after the close. Significant breakdown, significant kind of candles here, rejection candle, bearish candle, and a big rejection candle after taking out a lot of people's stop losses here, sneaky Wall Street. And now they've closed it below. It seems inevitable it's going to try to get towards that 135, that 130 area after this chip shortage news. Let's move over to the calls and the options expirations for the end of the week. And you'll notice here that we have, of course, a bunch of calls sitting around that 145 to 150, 155 area. It looks like they're not going to be very happy by the end of the week. And again, the bear positions actually not as large as you would expect. So usually you would expect huge amounts of puts to start coming in. And if the market goes bearish, we'll start to look ahead to the next week. And what I'm going to look for is huge put walls. We're going to look for huge bases around that 130, 135. Do we get it? Our options will come through on that one. I believe we'll be able to find out a little bit more as information comes out. Fang Stock, let's take a look at the Fang in general. So this is actually a market that a lot of people should be looking at. The Fang market here is showing weakness. Now we had those rejections. This is the overall larger tech companies. And then we've seen selling and selling again. It seems inevitable we go and test this 5100, 5120 zone. If we do get down there, that's where the pressure between the buyers and the sellers really gets intense. And if they push it underneath, our next expectation is obviously much, much weaker from the markets. And that's where we start to talk about, some big moves on the Nasdaq that we'll discuss in a second. Let's move over to US oil. A lot of people bullish on this, and rightfully so. We still have that $86 target, which could be reached over the next coming weeks. And we know that at this stage, with the pullbacks that have occurred, the only thing that we've seen is the 50 exponential moving average on the 4-hour has been relatively good at predicting kind of the dip purchases. So we'll see if that continues to hold up over the next coming sessions. US 10-year, a lot of people have been discussing this one, and they've been talking about, how can the Nasdaq go down if the 10-year goes down, Tom? The 10-year just really shows you that initial weakness in the market. It just shows you that if you break past a key resistance, you may expect it to go to the next level. And therefore, that allows you to have a little bit more negative bias on things like the QQQ, because we know if the 10-year goes up, generally initially the QQQ goes down. Not every single move by the 10-year is going to move the Nasdaq. So we've got previous resistance becoming support. This is where we expect the 10-year to continue to kind of like long or go up over time. Now let's move to probably the most exciting market right now, and that's the Nasdaq, because a lot of you guys love tech here. We all love tech, and we all believe in tech over the next decade. Of course, this is going to be one of the most interesting sectors and most interesting markets to be in. So we've got weakness coming in here. Here's our downward trend line. You'll notice it's still very intact. That's going to show us when those bulls get back in control of the markets, and they closed bearish. Look here at these last couple of candles on the 2-hour. We have a rejection candle, and a little bit of bearish sell-off. And after the market, you can see post here, 355.83. So selling certainly ensued. And if you watched our close stream, you'll notice that's exactly what we expected. A decent sell-off straight after that close. It was signaling that the futures market would tank a little bit, and it did. Next stop, are we going back to the 350? Wow. 350 seems to be the area that is most likely. I would like to ask the room at this point, and the chat and everybody, what's your comments down below? Do you think it's going back to the 350, or are you a bull and saying, okay, next stop is actually more likely like a 370 or something, Tom? Let us know. I'm interested, bull or bear at this position here with the Nasdaq. At this stage, bearishness seems to be more likely. We come down, test this support, and that is going to be a very important zone, because if we go around to the dailies, we're starting to talk about closing under 350. That exposes that 342 on the QQQ, the daily 200, and that's the big area that people look at. We also know that this weakness that's coming through at the moment in the markets is going to put further pressure on our longer term trend line here for the Nasdaq. So I'm thinking at this point, maybe the trend line is not as safe as we once had that suspicion of being. Remember, watch that S&P 500. If it gets under 4,300, guys, the next level for the Nasdaq seems pretty clear, and that's going to be around here. Then we hopefully get that bounce and the correction is over, because we really shouldn't be bearing into the end of the year if we're in a nice cyclical bull market. It should start to turn around relatively soon. We'll move over to Bitcoin. A few people concerned here about a crash. I don't think it's a crash. It's just a market pullback. Remember, market just went from 40,000 all the way to 57,600. It's very expected that it comes back and hits key moving averages, and it kind of finds some support. It bought straight off those previous lows, and it looks like there's a nice dip purchase that's going on at the moment from Bitcoin. Expect Bitcoin to hopefully start to hold or consolidate, and if it does, then we move into a lot of the altcoins, and we start to see Ethereum really do better, Cardano do better, DOT, all of these other cryptos start to really come through. Bitcoin shorts, not something to be concerned about at this stage. We haven't seen a rise in the Bitcoin shorts. Again, that's usually synonymous with the market getting toppy, and we haven't seen that occur. So that means the whales are still with us, guys. They're not against us. So we spoke of big news before, and we talked about the FOMC meeting minutes. Now, obviously, tapering is the concern of the markets here, though I think the markets have already allocated a lot for that. I think the bigger concern here is probably going to be the core CPI or CPI data. If this comes in a little bit differently, and then we get, so let's say we get negative results here, and then we end up getting tapering discussion coming in through here, the markets may not like that, because in both sides it's a negative. Usually bad news has been good news because we keep the Fed on board. But if bad news continues to stack into the PPI on Thursday, and then of course the core retail sales and retail sales on Friday, and we continue to miss, and we're getting tapering, the market won't like that. And that will probably create that flash corrective period where we go down to those key support levels for the S&P 500 and the Nasdaq. I'm certainly hoping we do get that deeper correction. And the reason why is not so much that it's a great level or anything like that. It's just normal in healthy markets. And some people will say, well, this isn't a healthy market. If you get a correction followed by a bullish pickup, it is healthy. It is normal, guys. And remember, there are many pullbacks that occur through the year, but in general, the market is optimistic, as we can see on this chart. And even with those pullbacks, average 4.6 over time, you generally don't have too many of them. So remember, being an optimist, being a bull is generally better. And overall, the markets are designed to go up over time. So this is more of a correction as we see it right now, unless something comes out of left field that we haven't allocated for yet. Stay tuned, guys. If you enjoyed the video, remember to subscribe, smash that like button, and we'll see you next time.